Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another income pick. If you'd like to read what John writes on a regular basis, you could head directly to incomeinvestors.com. You can find the link to the website in the description below. Investing wisdom states to buy low and sell high, but in practice, you see the opposite. Investors become more interested in assets that are already performing well, reaching new highs, and overlook or become outright bearish on opportunities when they're low. And this could be the case at B&G Foods, Inc., traded on New York Stock Exchange under symbol BGS. In early 2021, BGS stock traded as high as $39.04. Now, it trades around $9.60. This represents a decline of over 75%. Though B&G Foods stock comes with some risk, but it's certainly worth a look. John?
Thanks, Mo. You're correct. B&G Foods, Inc., just a little background, manufactures, sells, and distributes shelf-stable and frozen foods across the United States, Canada, and Puerto Rico. Now, its products include frozen and canned vegetables, hot cereals, spices, salsas, tomato products, popcorn, you name it. Yeah, no, it's all about its brand loyalty, though, and B&G Food has a diversified portfolio that most people have encountered. Some of the company's 50-plus brands include Cream of Wheat, Crisco, Ortega, Cinnamon Toast Crunch, Static Guard, and Weber sauces and seasoning.
So, John, tell me, what's been going on with BGS stock?
Yeah, now look, inflation hurts consumers and it also hurts businesses. And you can see this playing out in B&G stock. The recent slide isn't a big surprise. Management gave investors a heads up. Back in 2022, B&G Foods started warning investors about how inflation and supply chain issues were making it a challenge for the company. Though the company did try to put in certain pricing action and recover from higher costs. But sadly, by late 2022, margins started to get thinner. Now, mind you, B&G Foods also has a decent-sized debt load, $2.56 billion as of this recording. Now, as interest rates started to increase, its interest expenses started to cut into profits as well. And worse, near the end of 2022, the company announced a dividend cut. Now, fast forward to 2023, in the third quarter, B&G reported a sales decline and a big loss. Now, that kind of news doesn't exactly sit well with investors, so the selling is somewhat justified.
What's ahead for BGS? Why should investor pay attention to this company?
B&G Foods has certainly faced headwinds. It's actually taking proactive steps to improve its financial situation. Over the last few months, the company has sold off some of its non-core product lines in order to raise cash. Plus, it has issued some shares and even long-term debt to raise even more cash. Now, this is good. It takes time to get financials in order, but as they get better, the stock price reflects it. This could be the case for BGS stock as well. And at the moment, investors are so pessimistic towards the company that it's hard to ignore. For some perspective, consider this. BGS stock trades at a price to sales ratio of 0.37, price to book ratio of 0.95, and price to cash flow ratio of 4.16. Now, what do these numbers mean? Essentially, investors are valuing each dollar of sales, equity, and cash flow at 0.37 cents, 95 cents, and $4.16, respectively.
John, I know with stocks, everything is relative. How do these valuation numbers compare to its peers?
Yeah, the packaged food industry, which B&G Foods belongs to, has an average price to sales ratio of 0.51, price to book ratio of 3.59, and price to cash flow ratio of 15.55. Now, assuming BGS's valuations start to improve and mirror their peers, the company's share price should improve as well.
Here's something income investors would be interested in. Despite all the headwinds, BGS stock still offers a great dividend.
Yeah, and that's one of the big reasons why we're here talking about B&G. B&G's share price is certainly down. Financials haven't looked so strong, and there's even a dividend cut. Despite all this, income investors continue to be treated well. In mid-November 2023, B&G Foods Board of Directors declared a dividend of 19 cents or 76 cents per share on an annual basis for a current yield of 7.79%. Of particular note, this represents the 77th consecutive quarterly dividend that B&G has paid out. That's something to consider here too. B&G Foods is working fairly hard to get its financials in order. If it's successful, in a few quarters is back to being profitable and generate cash flow, will its dividend remain the same? Prior to all the issues, B&G Foods paid a dividend of $1.61 in 2022 and $1.90 in 2021. Before this, it increased its dividend for several years in a row.
Thank you so much for your insight. Just to recap, B&G Food is a consumer defensive stock with a diversified portfolio of shelf-stable and frozen foods and household products. The company has run into some issues recently, And this has resulted in BGS stock price trending lower and its dividend getting slashed. But it has taken some steps to improve its financial position, so there's definitely light at the end of the tunnel. Those who can be patient and willing to take some risk could be rewarded well over time. The BGS stock could make a major comeback and dividend payment could grow. That's it for today, and make sure to go to incomeinvestors.com now to get our free special reports on 3 income stocks to own today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. We'll be back with more income picks soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.